Welcome back, ladies and gentlemen, to NSJ Gold Corp's channel. Joining us, as always, VP of Corporate Development, Rodney Stevens. It's good to see you again, sir.
Hey, good to see you too, Kyle.
Such a pleasure. So last time we kind of touched on your background at Sullivan Partners back in 2001 to the current mining project, the Golden Hills. But this time I kind of want to take a deeper dive into some of the balance sheet questions and exactly some of the costs behind these projects. So maybe we'll start with the property payment schedule and kind of the current cost breakdown of what it's taking you guys to get these exploration sites into development.
Right. Well, the cost is very minimal, actually, relative to other property agreements. We only have $200,000 to pay to the vendor, who is also our geologist on the deal. And that's staged over 5 years. So 40,000 in year 2, which is coming up, 60,000 in year 3, 50,000 year 4, and another 50,000 in year 5. Now in the ground, we have 4.6 million to spend. And all this is to earn 100% interest in the property. And that's staged over 5 years as well. So the first year, 85,000, which we'll be completing. Second year, 150,000. Third year, 400,000. 4-year, $1 million. And the 5th year, 3 million to get 100%. And that's exploration that we would otherwise spend anyways. So yes, it's really kind of like we're paying a couple $100,000 over 5 years. And that will give us 100% interest, subject to a 3% NSR royalty to the vendor.
Nice.
But we don't expect that 3% NSR to be very onerous because we're drilling high-grade veins near surface that average around 10 grams per ton. So even on a smaller scale, that would be profitable, highly profitable after the royalty payment. And then when we drill the porphyry at depth, it's low grade, but it's bulk tonnage. So it's the sort of thing that, you know, if we were right on a discovery, it would be it would be something like that would have a NPV of 2 billion and cost 2 billion to bring into development. But when you look at that scale and you net the byproducts credits against taxes and royalty, the costs are still really low.
It's great to hear. So kind of based on your interim filing on top of that, and we're going back to May here, so obviously we don't have to jump too far ahead. So some of these have probably changed, but you had about 1.3 million in cash. Now, have you guys baked a lot of these prices already in and fronted a lot of the capital into the project development already? I mean, you're kind of planning this out over a 5-year term. Are you going to have to raise more capital to achieve these goals? And if so, do you guys go through dilution or are you more debt kind of focused? I know the balance sheet right now is like no debt. So, I mean, that's a pretty good sign too, right?
Yeah, we raised about 1.8 million Canadian prior to listing. And we're at around 1 million right now. So we've spent money in the ground and we've reported drill results. So we're already ahead of the exploration payments in any case. But yes, once, you know, probably, you know, once we're down to a lower level of working capital, we'll be in a position to raise more money, hopefully at a higher share price.
Now is what's the time frame with that specifically? Because like I said, you're looking 5 years out for a lot of the pricing period for the cost, but is that kind of encumbered in that cash position, or are you going to have to extend beyond that a little earlier on?
Well, we'll be raising more money in the next 12 months, and the purpose for the raise will be, you know, to continue to intersect the high-grade veinlets near surface, but also to do the concept drilling program on the porphyry that we believe is below the historic veins.
Perfect. Awesome insights, man. So I kind of want to just step back a little bit because from the stock position, I know a lot of people always look at the way the shares are kind of spread around. Can you kind of just break down the ownership base between retailers, insider ownership, and kind of, you know, the actual institutional?
Yeah, well, we actually, when we started NSJ Gold, it's almost still relatively like a brand new deal. We initially launched the company as a shell that we would take public without a property and then find a property. But in the process, Jag, you know, he already had a pre-existing relationship with Richard Kern, who is our geologist and property vendor. And we looked at this and said, this is already a really great property to drill. So as we were launching the company, it was initially about, 100% owned by insiders and management. And then we did a financing of about 1.8 million. So now management's diluted down to about just under 40% ownership in the company.
And then you said sorry, go on.
Well, the next financing would be theoretically larger, and we could open it up more to institutions potentially coming in as well, who are interested in the porphyry potential.
Yeah, so you kind of mentioned that. So it's primarily the retailer making up the 60%, and then about 40% right now of insider ownership.
Yeah,
These are some great insights, man. I appreciate your time today, Rodney.
no problem. Anytime.
In light of this, stay cool, stay awesome, and as always, we'll catch you in the next one.
Okay, sounds good.